Hello, everybody, and welcome. This is Jordan with Conquering Trading and Investing, and today we're going to take a look at some setups occurring during the New York session. We had a lot going on yesterday. Specifically, we had a nice setup developing on the US dollar, Japanese yen, and also on gold. We're going to take a look at those two first and see what is happening, as well as we did focus in on the euro US dollar yesterday and what was happening with that. And we're going to see that actually an opportunity to get in is beginning to develop. But before we get started, I want to first start now with taking a look at the calendar. There is nothing on the calendar at all today, but I just want to make sure that everyone is in the habit of always making sure they're checking the calendar to know what high impact news events might be approaching in the same day or in the days ahead, which would greatly affect the positions that you choose and trade in and out of. Also, as far as the news is today, something that was important, and this is from Federal Reserve's Edvins. He said the US consumer is supporting the economy in an enormous way. And the reason I point that out to you is because if at any time we see that the US consumer via retail sales is starting to spend less money, is starting to come off, is starting to feel the burden of being over indebted, that will be the biggest cause of concern we can see for the possible future of the US economy and therefore, of course, the world economy. Now let's get back into it. We're going to start off looking at first the US dollar, Japanese yen. And because yesterday we were watching this and we saw that we have this triangle that we drew in here with this yellow line, and it looked like we might possibly be breaking out. Now you could see that we had this resistance over here, which then was tested last week and then again yesterday, and it is still yet to break. Although now we've come off. I'm going to drop down to the 8-hour time frame, and you can see that price has come back and is testing what I have here as the base of this triangle. This looks like a fantastic opportunity to get long. We also here have the entry CCI oversold in an uptrend. This is saying that the near-term price has come off and is now giving an opportunity where you could get into a trade at a more comfortable level instead of buying, following momentum. And then as you get into the trade, a lot of people yesterday bought over here. They bought yesterday during this session when they saw price rising and they said, oh, price is going up. I want to get into it. And we said, no, we have to wait a while. And look what happened. Prices come back off down. And now it has tested this base. It has tested this was resistance and is now support. And so far as acting as support, this gives us an opportunity. If you see price make a higher high than the previous price bar, I'm looking at the 8-hour time frame here. This could also be traded on the 12-hour time frame, the 4-hour time frame. I prefer trading off the 8-hour time frame because there's 3 signal periods a day, first of all, which makes it really easy to trade. And then aside from that, it does take out a lot of market noise, a lot of chop that like the 4-hour time frame does provide. So we said here, if you were taking that breakout, then the stop loss would be on the previous, the low of the previous price bar, which was down here. Now, this makes things a lot easier going into today. We have a clear signal. If price makes a higher high than this price bar over here, that's a clear signal that the resumption towards the trend in place, the trend is up, is occurring, and price near term is currently oversold against the trend, giving us a slingshot back into it. So this will provide about at 109.05 will provide a nice long entry into the US dollar, Japanese yen. The stop loss would then be moved up to here, right? That gives us a really tight stop loss of about 20 pips, which means that the position size could be pretty nice because the stop is well defined. And as far as take profit, we have, and we would be looking for all the way up to this area right here. This is where this breakout would be targeting somewhere between 110.70 and 111. So that is a nice trade. We will keep watch of that. Now let's move over to gold. Is something that also we looked at yesterday, and we said that, well, at the time it was trading right above this trend line support, and it looked like it was rising up a little bit at that point. And we said, well, this is a nice guide for here. We have these two lines here, this channel, to give us some type of gauge. And price has since broken and closed below this trend line support right here. So, and you can see up right now, it's beautiful. This is textbook coming up and testing that breakout, trusting this trend line, which should now provide resistance. If you break down to the lower time frame, you can see that playing out very nicely. So either two things are going to happen. Either price is going to make it back above this trend line and close back within this channel today. And if it does, that's bullish signal, right? Or we're going to see price roll over and start making new lows. There's nothing to do right now. Right now, you want to wait, right? You don't want to get into a trade until you have a lot more certainty. And right now, gold is showing us that there's two possible plays happening. Number one, and what looks most likely, is that this is going to resume downwards after breaking this trend line support. And as soon as it does, again, as soon as it starts making lower lows, that's an opportunity to get short with the momentum. If we pull up the two trends, you can see that the trend is now short. Entry CCI is giving us criteria to look for a trade. We just need price action to take us back into that trade by making a lower low right there. If price does close above higher inside this channel today, then this short trade is now off, and you could then look to reestablish any long trades. Now, the first thing I did in the morning is I glance over here, and I see that what I see is really, and I'm looking at the percentages, right? And there's no pair really this morning offering an opportunity to scalp this morning during this session. There has not been much movement overnight. You could see that all of the trade ranges have been very narrow. And I could just look at the percentages here. And if I'm not seeing anything about for currency pairs, that's about 0.5%, then I know that there's not much going on today, right? So I don't want to be looking for any scalping this morning. There's no pair that is so active that I want to be trading it. So I know that immediately the thing to do then is jump to higher time frames and look to take swing trades off the higher time frames. You do not want to be looking. The only pair that is even moving a little bit is the Australian dollar versus the Canadian dollar. But let's drop down to the 5-minute, and that's not a pair that you want to scalp, right? Look at these long wicks on every single 5-minute price bar, right? So you want to, the US dollar, Japanese yen, the euro versus the dollar. These other pairs are definitely more healthy for day trading. Today's not a day for day trading, and this is one of the most important things you can do as a trader is have a type of idea, a sentiment of the market. Is the market trending, or is the market in a trading range? Is the market choppy, or is it giving clear moves, clear signals? And by first determining the state of the market, and that's why we also look at the calendar, by knowing what's coming up in the days ahead. If, for example, if there was an FOMC meeting this week, you would know going into it the day before, 2 days before, the market would be a little more quiet than normal. Now, I just want to establish that today's not a day to be looking to take day trades off small time frames. It is a fantastic day to wait and look for these trades to develop. So far, we have the US dollar, Japanese yen giving a fantastic possible buy signal. We're just waiting for price to take us back into that trade by making a higher high than the previous price bar right here. Also, gold is a possible setup that is still developing. It is lagging behind a little bit the US dollar, Japanese yen, and the euro US dollar. Yesterday, we saw that price had fallen. Price had broken this trend line, and in our weekly analyst and forecast, we knew we were watching that going in. And a lot of traders yesterday, they got short right here, right? And we looked at this and we said, you know what? This is not the time to get into the trade. I'm gonna drop down to the 8-hour. We were waiting for the true trend to cross over the zero line to the to the negative side, showing us that it's the downtrend. And we were also, the entry CCI was down here yesterday morning when we looked at this, and we said if we sell while the entry CCI is pinned down, most likely price is going to come up, and that's exactly what happened. But you could see that it has since come back up, and now it is offering us criteria. The trend CCI is lacking; it is hugging the zero line, but the entry CCI is giving us a much better signal. And again, if this makes a lower low here, that is a possible, albeit more aggressive entry. The better entry, and I hope you can see that now, is definitely on the US dollar, Japanese yen. You can see that uptrend is a little more established. You can see that technically it's coming back. It's testing this, what was resistance and is now support. It gives us a clear entry signal, as well as it's giving us a clearly defined exit if we're wrong. That being said, this is also still a pretty nice setup that is developing, one to keep watch of. And especially you notice that the break right here, if we do make a lower low, is also occurring at the low of last week's weekly range, which if we start breaking down towards it lower, you have a lot of traders from last week who are long over here, who are at that point going to be forced to exit their position, providing a little more fuel to the fire. Let's take a look at Bitcoin. I'm looking at Bitcoin here on 12-hour time frame. And you could see in the description below, there is a link to the Bitcoin trend following strategy, and it is using this true trend BTC. Now, this is a long-term strategy. We're hoping only to get several or less trades a year every time these true trend with the Bitcoin settings does take a crossover. The idea here is to be holding Bitcoin when it is trending up and into on the sidelines when it is trending down. Therefore, you are only holding Bitcoin as it's really making moves up. And by doing this year over year, you could accumulate a lot of Bitcoin. I have a video that I hopefully will be finishing today, and it is fantastic. It is called "Is Bitcoin Worth Investing In?" And it really lays out why I personally do invest in Bitcoin. I trade all of my my foreign exchange accounts with Bitcoin as a base currency, and I want to explain to everyone why. Now, it doesn't matter what you trade with, whether you're trading with US dollars, euros, or pounds as your broker's base currency. All the strategies work the same. Although I want to definitely lay out and share with you why I choose to use Bitcoin. Now, we could see here that price, ever since, we had two things happen. We had, first of all, this breakdown out of this triangle that first occurred, and then price started breaking down further, breaking this. It was about $7,600 support, and it wound up being a fake move, right? A lot of institutional buyers on the back exchange came in here and bought in record volume and send the price screaming higher. And in a sense, it is consolidating. We're just waiting here for this true trend to see if it will turn positive. And if it does turn positive, that's going to be a signal, a long-term signal for us to get in and be holding Bitcoin long. I'm not interested right now in any other of the altcoins at all. If you were looking at them, again, you could also use the same indicator for trading them long term. It just makes no sense to be trading in and out of them. Currencies offer much better opportunities. Now let's take a look at some other pairs this morning. We want to look at what's going on with the Japanese yen pairs, and this long consolidation continues. I'm going to go to the higher time frame. I'm going to start on the daily with you guys. And hey, Peter, good morning. How you doing? Thanks for being here. I see that. All right, first I want to start with price alone with you. All right, we have our plan laid out from over the weekend on the weekly forecast. And all that I notice right now, and we're going to look at all the Japanese yen Japanese yen pairs together, is that price is still within this range that it's been in for the last 2.5 weeks now. That means to me that unless you're trading some type of range bound strategy, that you just want to stand aside and wait for things to develop further. It doesn't make any sense getting into this trade at the moment because there's just no clear edge either which way. I could see that because price is consolidating towards the high of this move, that things are leaning bullish. But I also see if we do get a breakout up here out of the high of this range, then it looks like we will be testing up into the sell zone, which is also a take profit zone. Right now, we just need to stand aside, but it's very important each day to review the charts so you have this feel, you have the heartbeat of the market, and you know what's going on. So as things develop, you're ready to take advantage of them, as opposed to just coming in cold. And when that's how traders trading without a plan, without a strategy, and without preparation get caught off. Before I look at the Australian dollar, US dollar, I just want to finish the other yen pairs. greetings, then. Wow, that's not so bad. Our time zones are not that far off then. And greetings to China. Looking here at, we also see that the pound versus the yen is also within this 2.5 week range. It is consolidating towards the high. That looks like it's trying to break out to the upside, but it is still holding within that range. Clearly, it's time to stand aside. And this one is interesting. The Australian dollar is leading that breakout. There was yesterday this breakout that didn't hold outside of this range, right? It's trying to get up, and this one is, speaking of China, this one is the Australian economy is highly correlated to the Chinese economy. And we see here, we've seen the yuan really strong the last couple of days. So it looks like some concessions are being made on the US side during these trade deal talks. And this is being priced in here on the Australian dollar, Japanese yen. If we do get any type of resolution where we see that the phase one deal is going to be signed, specifically if tariffs are come off a little bit, we're going to see this pair make some big moves, and that's why it's leaning towards this breakout. At the same time, it is also cautious that a tweak could come and we could find out that the tariffs being taken off are off the table, and then this phase one trade talks could fall apart really quick, and then this pair will come off. Similar action with the New Zealand dollar, Japanese yen, except you could clearly see that the New Zealand dollar is weaker than the Australian dollar. It's trading in the midpoint of this range. It's still within that range. If for any reason, if for any reason, all right, we're going to look at that in 1 second. We're going to go back to the pound Japanese yen. Peter, as you did say that you are holding that long. I'm not sure where you're holding it long for. Let's look at that right now. I'm not sure where you're holding it long from. If you got in anywhere below either 136 on the breakout over here, if you got it in anywhere over here, below 136.2 or below, and you're still holding it long, that's a fantastic trade. That's amazing. As well as if you did wait for this trend line, for this resistance to be taken out and then that to be tested as support. So 139.3 is also a good entry on this pair. And if you're still holding long from one of those two entries, that's fantastic. In my opinion, if you got long anywhere within this range up here, specifically this portion of the range, the upper half, you have to be really cautious because you do not have a safe entry. Now, again, if this pair does break out above this range and it starts really getting some momentum, well, that's when I'll be looking to get back into it. And what I'm going to wait for then is I'm going to wait for the entry CCI to be pulled back against the trend, showing me that it's giving me a safe spot to get back into that trade. So we've covered the yen pairs. We haven't looked at the Australian dollar, US dollar, or the British pound, US dollar. Now, being that the Australian dollar is tied to, we did look at this yesterday. And when we were looking at this yesterday, this was trading down here. We were saying that there was this confluence of this support from this trend line, as well as the support line right here, giving a good entry. Although we did notice that yesterday, the US dollar, the DXY, was really strong relative to everything else, very strong. So it was a little bit iffy entering into a trade where you're trading against a strong currency pair, even if the Australian dollar was holding up better than most other pairs yesterday. And see, today we have actually other pairs who are outperforming the Australian dollar against the dollar. So this is saying to me, it's giving conflicting signals. It is trading within this range that I keep moving between, over here at the 0.6930 and down to this 0.687. So you have this 50 pip range that it is trading within. Again, consolidating. We're seeing a lot of currency pairs at the moment consolidating. And what that means is that big moves are getting ready to happen soon. Markets go from trending breakout periods of momentum, to periods of consolidation. The consolidation periods, the market chops, tend to last longer. And what they're doing is like a spring coiling, holding that energy for when the breakout could happen. And it's easy to see. We have this clearly defined support right here. If we break back below this, you could see also here this trend line support. If we do break right over here, guys, if we break this area right here, we're breaking this trend line support, we're breaking this trend line support, and we're breaking this support area right here. So at that point, that would be a strong sell and probably going all the way down to here. And if that happens, what that meant was the trade talks have gone cold. That you'll know that will be the catalyst that would cause that to happen. Right now, the markets are cautious, waiting to see what's going to develop. This is being played out right here on the Australian dollar, US dollar, and also on the Australian dollar, Japanese yen. So this is definitely a news fundamental driven play right here. It's not a technical play. I mean, the charts always price in everything, and you can see it playing out technically as well, but it's more binary. If things work out in the trade deal, this is going to work out. And if things fall apart, this is going to be definitely a strong sell, looking for a test of the lows down here. This is not offering one of the better opportunities today. Well done, Peter. Peter said he got it in before the breakout. So I'm judging he got in all the way down here, somewhere around 136. And that was just extremely well played, and even better that you held it up here, because once we got up to here, there was a lot of we didn't know what was going to happen internally in England, specifically between the Prime Minister and the Parliament, and it's very complicated, and it's almost a bit of a circus, right? So, which way? Nice trade. These are the pairs that I want to focus in on today, the pairs that I'm looking for my opportunities on, and that is number one, the US dollar versus the Japanese yen. I'm looking to go long here. I will go long if price does make a higher high than the previous 8-hour price bar. That's the time frame I'm trading off of right now. I'm not looking for any day trades today. I'd like to trade during this time off the 1-minute chart, scalping. I will get into that on a day that it is appropriate and show you how that's done and how I do that. It is not today. I also see the gold is offering a possible opportunity it looks like we're waiting to get short. If it's possible, there is going to be a lot of room to the downside. The first test will come in over here at 1,460. And if that breaks, we're going down much further. Then we're going down first to 1,383. So this is a trade that you could see that it's been consolidating for a long period of time, but at the same time, it is making lower highs each and every time. Let me just draw that in visually for you to get an idea. You can see that is happening. And then you could see that is what's happening. So that's, it takes time, it takes patience. That's what's developing though. The other thing that we do want to look at is the euro versus the US dollar. This is also offering a nice possible resumption towards the trend. If we do make a lower low, I'm also going to take a piece here. I will take a smaller position than on the US dollar Japanese yen, because I believe that the US dollar Japanese yen is offering a better opportunity. At the same time, it's always nice to be it's always nice to be long and collect the swamp on both these pairs, and it's to be long the dollar on both these pairs. Obviously, both the euro and the Japanese yen have negative yielding interest rates. It makes it an attractive swamp versus the US dollar. Traders don't like to hold them too long the other direction. Let's see what else we have today to look at with you. I want to look at, I'm going to go back over to these charts. I'm going to go to the daily time frame. You'll see below in the description, you're going to see a link for the 1 hour trading strategy. I'm sorry, the 1 hour a day trading strategy, where you could trade specifically for full-time traders. And I'm just going to take a look at the pairs that I'm trading on that strategy. I trade that off the daily time frame, and I'm looking to see when the next zero line cross is going to occur so that I am ready. Now, this strategy is phenomenal. I really suggest you go ahead and watch the video. It would take no more than 5 minutes a day. You just saw me check if I have trade criteria on 5 pairs, and it took literally 15 seconds. If you did have any orders to place, then of course it's going to take you 5 or 10 minutes. But the orders do not come frequently. This is a fantastic strategy for those who have a long-term mindset, who are looking to produce 20, 30 or more % a year and want to do that with a full-time job. I highly recommend that video. I will each day check those trades with you and looking for trade criteria so I can prepare for later in the day as these price bars close to go ahead and take action if needed. I'm going to put this back on the 12-hour. This is where I'm following my Bitcoin. There are a couple of trading rules from William Gann that I wanted to take a look at with you. Now, he's one of the most successful traders that's ever traded the market. His system and strategy are not known, but he did have a set of rules that he did follow religiously. And there's some really good stuff in here to look at to reinforce. Let's take a look and let's see which ones that we really like. He says, don't enter a trade if you are unsure of the trend. Never go against the trend. And obviously this is something here that we're all really mindful of. And that's why we use the true trend, so that we know where the trend is, and it always keeps us on the right side of the trend. When in doubt, get out, and don't get in and when in doubt. Well, this is something that we've covered today, actually, because we saw that, there are just not some clear signals on a lot of pairs. We see, specifically right now, the Japanese yen pairs consolidating, and especially on the euro, on the pound, on the Australian dollar, and on the New Zealand dollar. And that's just giving us a signal, just wait, right? It's a really important skill set of a trader to be able to show patience and wait. Only trade active markets. Well, this is twofold. First of all, what he's talking here is about volume. He, when you're trading a low volume instrument, you could see this in a lot of cryptocurrencies. You could see this in a lot of stocks. It makes it really difficult to get in and out of trades if there's no volume. A lot of people say that they don't like to trade US dollar pairs because of their low ranges, of their low average daily range. And well, the thing is they're the most active markets in the world, the most heavily traded, volumes in the trillions of dollars a day. And all you need to do is you could actually trade bigger positions, but those are better markets to trade. Distribute your risk equally among different markets. Never limit your orders. Trade at the market. That's really interesting. That's really interesting. He's saying never use limit orders to get in and out. He's saying trade at the market. I have mixed feelings about that. I have probably placed the majority of my trades in my life at market. At the same time, using limit orders could absolutely be an enormous advantage. Extra monies from successful trades should be placed in a separate account. This is really, if you have a discretionary account that you're trading from, and when you do go ahead and you're able to take in some nice profits, it does make a lot of sense to move some of that money out into a separate account. He says, never trade to scalp a profit. Have you ever once veered away from your trading system and took a quick trade? Actually, not only that, have you taken a quick trade hoping to make a small profit because there's probably only a small profit to be made, and then that trade goes against you and you hold it? This is what he's talking about right here. I'm sure it has happened to all of you. I'm sure. Yeah, there's always options. I know it could be Peter saying that your broker won't let you trade Bitcoin. There are always options available. I could help you out with that. Of course, in China, and if you're inside China, and with the firewall and with the restrictions placed on, things could be a little bit harder. We always have VPNs. There are many different options available. I will be getting into that with you. I'll help you out on that, definitely. It says never average a loss, right? This is trading 101. Never average into a loss. Obviously, that's different if you're scaling into a position with a predetermined plan and size ahead of time. Let's avoid taking small profits and large losses. Again, now, the most successful trading systems have trades that cut losses short, hold on to winning trades, and their profits come from a few percent of the overall trades. The overall profits of the system come from just a few percent of the overall trades. Most successful systems have a win ratio of anywhere between 35 and 45%. A lot of new traders are looking for win ratios of 80 or 90% because they don't like to be wrong. And what happens in those systems with those high win ratios is that that 5 or 10% losing ratios, they'll wipe out the whole account, right? Never cancel a stop loss after you've placed the trade. This is such good wisdom. It's really, really, really smart. If you ever find yourself moving a stop loss as the trade comes closer to your stop, you find out that happens more often than not is that no matter how far you move it away, you're going to get hit. You're taking a bigger loss than you originally planned. Now, the worst thing that could happen in that case is that you move your stop and it doesn't get hit that one time. Then it's going to be ingrained in your brain that moving your stop loss, preventing from you losing money on that one trade. But what's going to happen overall is you're going to take a lot more losses than you would have. It's really important to have BTC long-term daily close of candle. All right, Jeff, I'm just taking a moment here, pause from the rules. You're talking about Bitcoin longer term on the daily, saying a close of the candle during Europe, London. Do you agree midnight? Let's take a look. All right, what I'm seeing right now, Jeff, specifically on Bitcoin right here is I'm seeing. All right, could you see that? this line just draw on parlay. I'm seeing price consolidating, and actually we have this inside bar yesterday, and today so far also again looks like an inside bar. On Bitcoin, now Bitcoin is an instrument that is full of price discovery. It is a new asset. It's only 10 years old, and that's why you see such volatility. You see such large moves. Now, when price breaks out either to the downside or the upside, most likely out of this double day inside bar, you could get a nice continuation move. Which way that will be, we don't know. The daily is almost closing in a doji, closing at where it opened. So it's not really giving us any type of clue whatsoever, right? Everyone is, the bulls and bears are completely undecided. Yesterday, they were not able to take it higher or lower than the previous day. And then again today, and then price right now looks like it's going to be closing again close right now to where it opened. Obviously, we still have a little bit more time. We don't know what's going to happen, but this is not offering any type of clear signal whatsoever. Obviously, you're going to wait for a break. Now that will give the first clue of where traders are going to, who's going to win out, the bulls or the bears. On the near term, we're talking in which direction they're going to take it. Now, if you were to look at this on the 2-day, this also gives you, I mean, this is just helping take a lot of that chop out, and you see still a lot of indecision. So it's very clear that the bulls and the bears are just caught in a struggle right now, and no one has the upper hand. So you're waiting for price to break out. You could use the daily time frame, and you could wait to see on the previous bar if they take it higher or lower. But you have 2 days of inside price action. So that's it. There's a lot of struggle and indecisiveness going on. You could hear it in my voice, and that's because there's just no clear winner right now. Okay, for XX pairs, the daily, my daily close on my price bar, is that what you're asking for my FX pairs? Now I've heard some traders say that they swear by using only charting platforms that use the New York close and things like that. So, always trade what's on your charts. That's all that matters. And it doesn't matter what time close you're using, right? Obviously, what happens is at when the New York Stock Exchange closes at 4 o'clock Eastern time, FX pairs will actually trade for another hour, and then at that point they go dark. They go dark for a few hours until you start seeing some action in Asia. I'm not concerned at all about what time zone you're in, what time your charts close or anything like that. Always trade what's on your charts. If I'm looking at, for example, the euro US dollar, and I'm looking here at the 8-hour time frame, I'm looking at the previous bar, the last 8 hours prior. It doesn't matter when this opens and closes. It only matters what I'm seeing on my chart, and I'm trading off that technically. So always trade what's on your charts and what you see on your charts. Now, obviously a lot of foreign exchange brokers use different data feeds, use different opening closings. We just had, it's a little complicated on Sunday in the United States. They had daylight savings time. The week before that, it occurred in other time zones. My broker had first moved their server back an hour a week ahead. I have a lot of automated trading systems that trade off of certain hours of the day. So when it comes to that, you need to when the broker changes their time zone, and then I am trading off of the New York's open and close, you start seeing a lot of at 8:30 a.m. in New York. Obviously, there's a lot of news releases. That's when you see a lot of big movement happen. Then you see the next hour could be really choppy. I avoid that hour often on a lot of automated systems. And then you have to be able to go ahead and you have to know what time zone your broker's currently traded off of, what's happening in New York. I mean, in general, before taking a trade on Forex, Bitcoin, longer term, I'm just trading, as far as Bitcoin's concerned on Forex, I'm trading my account balance in Bitcoin, right? I'm just trading the account balance. So instead of in dollars, I have it in Bitcoin, because as I grow that Bitcoin, I expect, and again, I'm going to lay out in a phenomenal video that probably will even be shared today. I spent a lot of time on it last night. A phenomenal video really outlining the risk and the rewards to investing in Bitcoin. Personally, on a short time frame, just to give you some perspective, by May of 2020, I don't know if that's about 7 months from now, we will have the next Bitcoin halving, which occurs every 4 years. And I expect shortly thereafter, Bitcoin to be trading somewhere near $55,000. That's a 6x return from where it is today. So for me, it makes a lot more sense growing my account in Bitcoin, because not only do I get that gain from trading currencies, but then I also do from trading from holding it in Bitcoin. I do not trade Bitcoin on a foreign exchange broker, meaning I don't trade BTC US dollar. I do use there's some leverage platforms, Bybit and BitMEX, that I trade Bitcoin on with leverage. And I'm going to obviously share tutorials on how to do that and how to do that with extreme safety, so that you are not getting liquidated, so that you are trading it very calculated. I do not trade Bitcoin itself on a foreign exchange broker, meaning Bitcoin US dollar. And that's because they don't offer trading on the weekends. And I need to be, if I'm trading Bitcoin, I need to also be able to trade it on the weekends. And that's exactly why, because my strategy for trading Bitcoin, it involves, having to also trade on the weekends, and I can't do that with a broker. So I don't trade, and I think that clears it up, Jeff. I don't trade Bitcoin at all using a FX broker. I don't trade Bitcoin US dollar. I do trade the basic account in Bitcoin. It's nominated in Bitcoin. Peter, moving over to the US dollar, Japanese yen, you're asking, where should you place the stop loss or TP? I think it would be right. Okay. Let's take a look at that again. So again, yesterday when we looked at this, as far as the breakout, if you're trading a breakout, the stop loss automatically goes to the low of the previous price bar, which was down here. We were clear that we were not taking that breakout, that we did not want to take it. If anyone did, the stop loss would have been down here. We were waiting for price to come back down here exactly as it did. If you look at yesterday's video, if you look at the section on the US dollar, Japanese yen, we were very clear that we were not going to take this breakout. We were going to wait for price to come back down. And the reason we were doing that was because the entry CCI, the blue line here, was definitely overbought in an uptrend. So we wanted that to come back down as it is right now. You could see that price now is short-term oversold against the trend, right? That's what we're looking for. We're looking for it to be stretched out like a rubber band, right? Or a slingshot, which it is now. And as price resumes back towards the trend, we're looking to get in. So the entry is just going to continue being, as long as trade criteria exists, the high of the previous price bar. That's my entry. And as far as stop loss, well, I'm going to trade it really tight. If price were not to make a lower low than this bar right here today, and it were to reach an entry price first, well then, if it entered here before making a lower low, my stop would be really tight. It would be right here. It would be at the low of this price bar, right? And by having that really tight stop, it's a stop of let's look exactly. You have an entry of call it 109.8 and a stop loss of 108, call it 0.88. So that's roughly 20 pips, right? As far as the take profit though, let me zoom out. Let me go to a higher time frame. On a breakout here, I have 200 pips until I'm looking to take profit. I'm not looking to take profit until I hit this resistant line up here. We're getting close to it. And anywhere between, let's see over here at 110.65 and up to 111. That's my take profit zone. That's where I'd be looking to first take profit. So that's a fantastic trade. The stop is so tight, right? Not only because if the stop is breached, also come back down to the 8-hour with me. If the stop is breached, what's happening is this breakout area, which it broke out and then it's tested as support. If this is breached, the breakout is most likely failed. The first thing that will happen is price will mostly come back down and test this area right here. You could see the support offered right here. You could see the support offer right here. And then you also have this trend line support. So price sellers will look to take it down to here first, right? So I know I'm wrong. If price does not hold this area of the breakout right here, I'm wrong. But if I'm right here, I have such a high possibility to make some serious profits. It's a fantastic, beautiful setup. So that's covered then, Jeff. As far as the risk, that's where the stop loss, if you're asking what type of position size am I using, for this type of trade, I'd be I have pretty high risk tolerance here. I'd be risking anywhere between 3 and 4% for this trade over here because, the payoff is extremely high. This trade, as you see me talking about it, it looks really solid. We obviously have a nice trade developing on the euro US dollar, but it's not as exciting. It doesn't look as well as the US dollar Japanese yen. And same thing over here on gold. We have a nice trade developing, but it's really, unless you get that breakdown here, then we're coming down, right? So the US dollar, Japanese yen, I will be risking anywhere between 3 and 4% on that trade. I have a risk of 20 pips and a possible gain of almost 200. So these type of trades could really make for some windfall profits and really make the difference even in a year. All right. So is there anything else that you guys want to look at right now or are interested in that we could cover? I have covered everything that I am seeing going on today, and clearly my focus is over here today. I would take smaller position on these positions over here where we covered the setup on gold and US dollar, and also here on the euro US dollar. Those for me would be smaller positions with risking about 1% on those trades. I would like to get in them. You never know what's going to happen. You never know which trade is going to work out. You just need to prepare, wait for your setup on each trade. And then when you take them, right, you for example, I personally like how the US dollar Japanese yen trade is looking, right? But it's quite possible I could get into that trade and it could get stepped out, and I could I could lose on that trade 3 or 4%, but I could have gotten into this trade only risking 1%, right? And this trade could wind up going in and taking a nice profit, 3-to-1 risk reward and covering that loss on the US dollar Japanese yen. At the same time, since the setup does not look as well, I'm risking less on that trade, on that pair. All right. That's it for today, everyone. I really appreciate you taking the time to be here with me. We will be doing this again tomorrow at 9 a.m. Eastern Time, live streaming, looking at the market, getting that feel for the market. Again, even though there aren't things occurring right now, for example, on the euro, Japanese yen, even though we're in this range, which is going on almost 3 weeks now, this consolidation period here, we're watching it. We want to be watching it and ready for when something does develop that we're ready to pounce, right? By spending time each day looking at this and waiting and knowing what is going on, when the move happens, we're going to be ready to profit from it, right? Instead of just getting in blindly, right? Obviously, this is just a yellow caution, no go right now. There's nothing to do. Price is consolidating in this narrow range. Nothing is happening, but we have our guidelines. We have, I'm going to just, let me look at the 12 first. We have our channel, right? We have our predefined take profit and sell zones already established. So if we get a breakout up and we get into that trade, we know already where we're looking to take profits. We know where we're looking to get short again, right? So it's all about having the pulse of the market, having the pulse of the market, know what's going on. So we'll be doing this again tomorrow. If tomorrow offers any opportunities as far as more movement, we're not seeing movement today in the markets. You could look over here. Some people look at heat maps. You could just look at on your trade panel right here on your watch list and look at the percentages of the currency pairs, and you could see everything is under 0.5%. Everything's under point, a quarter percent. There's just not any movements, and therefore there's no reason to be scalping or day trading on the smaller time frames today. You have to know what market you're in. You have to know what to trade, and you can't trade something that's not moving, right? You have to wait. You have to be patient. So really appreciate it. I enjoyed sharing this with you today. We do not have a Telegram channel. We have a Telegram announcement channel. I could provide that link in the description. We don't have what I'm looking to do is to develop community here in this chat on these live streams with all of you. But we don't have a Telegram live channel for chat like that right now. So I wish you all a wonderful day, and I will see you tomorrow.